Well, in your consumer news, you've probably heard about buy now, pay later. It's a popular alternative to spread the cost of an item across many months with little to no interest. But now credit score company FICO will start factoring these loans into your credit score. Joining us to talk us through how this could impact your wallet is Vice President Paul DeZagon from Do It and Done Financial Services. Good morning to you, Paul. Hope I pronounced your last name correctly.
You did.
Oh,
Thank you
good,
for
good.
having me.
All right, we are awake this morning then. How many people use buy now, pay later?
Well, according to Capital One, 91 million Americans plan or are expected to use these loans this year as an alternative to credit cards. The big firms in this group are sort of Affirm, Afterpay, and Klarna. And what they're doing is they're allowing consumers to make a purchase and break it over to equal installments over several months, with the first installment due at time of purchase.
Yeah, you accept one and then you take on another loan. Pretty soon it adds up. But why is the news that these loans will affect our credit score so important?
Well, anybody who's applying for a mortgage, a home, a car loan, or even renting an apartment are going to have their credit pulled by FICO, for example. FICO is the most commonly used by lenders, and they claim that 90% of lending decisions are based off their score. The difference between a 620 credit score and a 720 credit score could mean an additional $8,595 for a 60-month, $50,000 car loan. It's a lot.
Yeah, it is a lot. So tell us how this could negatively impact our credit scores. Is it a huge hit?
Well, there's 5 factors that make up our FICO score. It's payment history, amounts owed, length of credit history, your credit mix, and your new credit. Payment history is by far the most important. If you miss a payment, it could really impact your score down the road. A payment that's more than 30 days late could impact your credit score and lower your credit score by 100 points or more, according to Chase. And unfortunately, I read a recent survey that said that 40% of these buy now, pay later users have made a late payment recently. So,
wow, better pay up if you're taking those loans, right? Well, it's not all bad news. Walk us through some of the positives of these loans being factored in.
Sure. So if you make your payments on time, it's a great way to build your credit history and as well as improve your score. And one of the beneficial things is if you haven't built up an emergency fund yet, this could be a great option to sort of manage your cash flow. If you need to, say, buy a new set of tires, this could be a great way to use the tool.
Okay, so we know this change is coming. What should people out there know before starting this out?
I think at the end of the day, I think consumers need to be honest with themselves. Is this something that I need, for example, whether that's going to be a new laptop for your child going to school, or is this sort of something that I want that's going to add to my debt burden down the road and put me in a worse financial position? I think that it can be a very useful tool to manage cash flow for people, but you want to use it for things that you need versus things that you want.
Yeah, and that line can get blurred sometimes because we kind of think we need everything, but it's a good to remind ourselves that we don't need it all, right? Paul with
Absolutely.
Do It and Done Financial Services. Paul, thank you so much for your insight this morning.
Thank you for having me.